All right. Well, good morning today, everybody, and thanks for joining us, Dr. Charest. It's a beautiful day in Omaha, and I'm sure it's the same out there in Puerto Rico.
Yeah, we definitely have the benefit of having sun 24/7.
You do. Well, let's get started. Let's talk about the macro environment here. Earnings season's almost done. It's been a season of beats for the most part in the biotech. We haven't necessarily seen that reflected in the index or stock prices, but what's your kind of overview, overall analysis of kind of the macro snapshot here?
Yeah, look, I'd say by and large, therapeutics companies that have reported have shown that, the business model is intact. There's a lot of new innovative drugs that are meeting and beating numbers and, margins have been, reasonable for some of the larger players and, they're projecting, by and large, growth at or above estimates. So, I'd say overall, selling innovative branded therapies is a business model that is doing well at the moment.
Yeah. Any tailwinds out there for the space that you can see or that are intriguing?
Well, certainly, I think there's expectations that when we do get some rate cuts and cost of capital
Mm,
is, demonstrably going lower, the mid cap companies that, Jonathan, these companies, even though they're putting up some numbers, they just haven't participated in this rally that we've seen,
right.
right? And there's still a lot of them are trading at all-time lows, 52-week lows, trough valuations. That sounds funny in a market that, is ratcheting all-time record highs for,
Mm,
some of the FOMO type names, big tech and some adjacent sectors. But a lot of these mid cap biotechs, Jonathan, a lot of them just have not caught a bid and they haven't caught an eye of investors. But I do think that that's ripe for reversal.
sure. Well, good sector, good market, just meh, kind of meh returns, right? Meh returns on the stock or on the stocks. Well, let's go into three. There are some stocks that did pretty well and had some interesting news this week. The Cipla Pharmaceuticals is one of them. It's acquired by Ono Pharmaceutical. What happened there?
Yeah, that was a good one. So Decipher is an oncology-focused company. They have a commercial stage asset. It's a KIT inhibitor called Chinlag. It's approved in gastrointestinal, cancers, and they're, expanding to some other indications. And it was nice to see $2.4 billion acquisition. And the other thing to point out, Jonathan, is Ono as a Japanese pharma company. You know, they're active in M&A, but for them to step up and do a multi-billion-dollar acquisition, it's nice to see. And I think it's suggestive of kind of what we were talking about, which is there are a large number of these commercial stage mid-cap biotech assets that are out there that are really trading at discounted valuations or very attractive valuations, so much so that, a company like Ono Pharmaceuticals, I would say a conservative Japanese pharma company, was willing to pay, a 75% premium to take it out. That shows you, where valuations are.
Yeah. Well, another one that we've talked about for a long time, it seems that's been around in your world for a long time is the BioCryst Pharmaceuticals. They had eh, a quarter ahead of expectations. What's the good news that you've seen from them?
Yeah, so look, that's a stock that really has not performed at all in the sense of the stock price, and it's really kind of bouncing around. It's trough valuation, it's less than $1 billion market cap a couple weeks ago. They announced a pretty strong first quarter beat for their drug Orladeyo, which is approved for an orphan disease called hereditary angioedema. It's the only oral drug approved currently. They reiterated $400 million kind of guidance for this year. And management team's been aggressive, Jonathan. They're saying $1 billion peak revenue opportunity, which
Mhm.
for a company that's trading at less than $1 billion market cap at the time was interesting. The other nice thing for this one was that the management team and a board member, I think it was about half a dozen members, all purchased stock in the open market after the quarterly report when they were in the open market window when the
Mhm.
blackout period was over. So I like to see that,
Yeah.
when a management team and board members are, kind of reaching into their own wallets and buying shares in the open market in addition to what they've been awarded for incentive comp. I think that's, again, it's the management team telling the street that, hey, we don't think you're giving us reasonable credit in terms of valuation of the company, given the sort of the growth prospects ahead.
Yeah. Well, another one that was kind of in the news or kind of on our radar was BioMarin testing that 52-week low. I mean, that's a stable company, a stable enterprise. What's going on with these guys?
Yeah, so BioMarin has been, one of the premier orphan drug businesses in biotech for, decades now, and you know, they um, uh, they had a transition of the CEO recently,
Mm,
and the new CEO has sort of been more committed to focusing on bottom line profitability, which really hasn't been something the company's focused on. And they've done some cost cutting, they've done some strategic reprioritizations of pipeline programs, and they have a couple major new drugs that they've launched. One for achondroplasia, and another
mm,
gene therapy. The gene therapy launch is going admittedly slow, and I think the street's been somewhat disappointed with the Roctavian launch there in hemophilia. But the achondroplasia asset's doing really well. It's on track to be their largest drug. The scuttlebutt here is there's a competitor, and there's some hand wringing around what's the competitive landscape going to look like when it matures.
mm.
BioMarin's out ahead. They have a premier sales force. Stocks at a 52-week low. It's interesting to see, right? I think it's juxtaposed against, again, where the broader markets are. And, a lot of these companies in other sectors are ratcheting all-time record highs with all-time record multiples and all-time record valuations. And here you have, an interesting suite of companies that are really trading at, they've never been this cheap. So I think
Yeah.
it's a good time for folks to look at some of these types of companies. Again, these companies aren't going out of business, Jonathan. They're going to be there for some time.
Yeah, everything's trading at like out of favor trough levels here. And these businesses are pretty good. It just kind of seems like everything's waiting for rates to come down. And that's a weird place to be because I'm sure as an investor, your hands are tied. You have to be just sit and wait. That's got to be frustrating.
Yeah, I think that's part of it. Look, I mean, I think that also there's a bit of an overhang from the election upcoming, right? I think
Mm,
that, every election cycle, there's going to be rhetoric from both sides around drug pricing and, trying to scapegoat, the third parties on, really being to blame for budget deficits and whatnot.
yeah.
So I'm sure that we're going to get more rhetoric around drug pricing, et cetera. Although I would say that, generally speaking, after the election's over, it acts as a clearing event. And, from what I've heard
Mm,
from the policy analysts that we're engaged with around this election cycle is it seems like, um, barring a full Democratic sweep of the White House, the Senate, the House and Senate, the prospects for having major drug legislation in the near to medium term is very low, almost
mm,
regardless of the outcome of the election. And again, barring that one scenario, right, where when you get the clean Democratic sweep, because they'll definitely try to come after pricing
yeah.
again. So, if that's the case, so let's fast forward to what things are going to look like towards the end of the year, right? We might be sitting here post-election, probably, maybe we have a rate cut, or certainly we have one. Maybe the timing is a little more tangible at that
Mm,
point in the year,
sure.
and you've had this big overhang cleared, and boy, you're coming off of kind of trough valuations. I think the setup's really interesting,
Yeah.
and I think now is a good time to really take a look at the sector again. Do you want to chase things at all-time record highs, all-time record valuations? That works till it doesn't. Hey, looking for some, real companies that have tangible value creation path forward, and a change in the broader landscape is going to be a tailwind for them. That's the setup we like, and
Mm.
that's what we see.
Yeah, that's a great setup. Just like your digest and life size digest says, I think we have 2x the number of M&As this year as compared to last year. So there's still been a lot of deals, both internationally and domestically. So it's frothy, right? Opportunity usually comes like in that setup you described.
Yeah, look, and we expect to see more deals again. Given where some of these valuations are, and a lot of these commercial companies, they're very undemanding valuations, and so it's
Mm,
easy for some of these non-traditional players like Ono to step up and you do multi-billion-dollar acquisition.
right.
Ono's not going to do a big high premium deal unless they think they're going to get a return on invested capital. And I think that there's probably a larger buyer universe, Jonathan, than just everybody thinks of, Merck and Pfizer and the traditional big pharmas as the major acquirers, and I think they will continue to be active. But I think, given the number of dislocated commercial assets, it probably expands the acquirer universe a little bit. I wouldn't be surprised to see more companies like an Ono coming out of the woodwork and, trying to bolster, their bag of products.
Well, that's exciting, and we're here for it. Well, thanks, Mark. This is great. It's good to have a little bit of optimism. I think we were talking before we recorded here. NVIDIA's about to post their earnings today or tomorrow, and that always makes the market move. So we'll see how it impacts our little sector down here.
Absolutely. But yeah, no, I think, Jonathan, people are going to like where we end up, sticking with biotech through, the election cycle, and on the other side of the rate cuts, it's not going to be tomorrow, but I think when we get there, I think we're going to like where we end up.
Yeah, that's a great picture. Well, thanks for your time as always, Dr. Charest. Appreciate it. Thanks everybody for joining us, and we'll talk to you again for next month's Doctors In. Take care. See you, Mark.
Thank you.